All right, let's jump right in with another deep dive. Today, we are going to try to unpack the HedgeRock EA. It was created by this guy, Aldo Marco Ronquilles. He's got an interesting style. He calls himself an overachiever on his MQL5 profile. He even talks about unleashing your inner trading beast. Sounds a little intense, right? So he has this background in both finance and engineering, and he says he has over 40 years of trading experience. What do you think about that?
It definitely gets your attention. He seems to be trying to connect the technical world of automated trading with the more psychological parts of the market. If he can do that well, then that's a pretty powerful combination.
I think so too. So HedgeRock itself is an expert advisor, or EA. It's basically software that makes your trading decisions for you automatically. We're looking at both the MT4 and the MT5 versions. They both have perfect 5-star ratings on the MQL5 marketplace. Now, there aren't a ton of users who have left reviews, but it's still pretty interesting, right?
Yeah. It's definitely a good place to start. But of course, we need to look beyond just the ratings to really figure out what's going on. The question is, can it live up to all the hype?
Okay, so let's dig into this. HedgeRock is advertised as this really flexible tool that's good for both new and experienced traders. Ronquilles says it has a bunch of settings that you can adjust so you can match it to your own trading style. It seems like it can use grid trading or technical indicators like the ADX. It can even use both of them at the same time.
Right. And that flexibility is super important in algorithmic trading because markets change all the time. So an EA that can adapt to different conditions has a better chance of staying profitable. It's like having a whole toolbox. You can choose the right tool for each job.
But with all these different options, I'm starting to feel a little overwhelmed. I mean, the manual actually has 9 different trading modes. It just seems like a lot. Where do you even begin?
Yeah, that's a good question. Too many options can be a bad thing. But Ronquilles suggests a good starting point. We can start with Mode 2, which uses the ADX indicator, then Mode 3, which uses averaging, and then Mode 6 for FIFO compliance. Oh, and you would turn Autolot off. This combination seems to be a good balance of reacting to the market while still managing risk.
Okay, so let's try to explain some of these modes to our listeners. Mode 1 is called price action mode. Can you explain the idea behind that one?
Yeah, so Mode 1 basically means reacting to price movements, trying to make money off the short-term ups and downs. The EA uses something called dynamic lot sizing, which means that the size of each trade is adjusted based on what happened with the previous trades. So if a trade loses money, the EA will add a carry lot to the next trade to try to make up for that loss.
So it's kind of like it's learning from its mistakes and changing its approach as it goes. But doesn't that mean it could get tricked by whipsaws? You know, those sudden reversals that can happen in the market?
That's a good point. If you're only looking at price action, you can be vulnerable to those shifts in momentum. That's where Mode 2 comes in. It's called the I80X mode. It uses the ADX indicator. So instead of reacting to every little price change, it uses the ADX to try to confirm how strong the trend is before it opens a trade.
Yeah, the ADX. That's one of those technical indicators that can be really helpful, right?
Right. It basically tells you how strong the current trend is. It doesn't matter if the trend is up or down. If the ADX is going up, that usually means there is a strong trend. And if it's going down, that might mean the trend is getting weaker or that the market is going sideways. So in Mode 2, HedgeRock is basically saying, let's only trade when we're sure the market is moving in one direction.
Okay, so it's trying to avoid those risky trades. What's really cool is that you can actually combine these different modes. Isn't that right?
Exactly. That's where it gets really interesting and maybe a little complicated. For example, Mode 5 lets you use averaging and stop loss and take profit orders all at the same time.
Wait a minute. Averaging. Doesn't that sound a little like that gambling strategy where you keep doubling down after every loss?
Yeah.
How does HedgeRock make sure you don't blow up your account? Yeah, you're right to be careful about averaging. It can be risky if you're not careful. But when HedgeRock uses averaging, it's about trying to get a better average price. When you have a losing position,
So if the market goes against your initial trade, instead of just taking the loss, the EA might buy or sell more at a better price to try to improve the overall position.
exactly. But it's not just blindly doubling down. Remember, HedgeRock has all those other settings, like stop-loss levels and position sizing controls, to help limit how much you can lose.
I see. So it's like it's walking a tightrope, trying to manage risk but also take advantage of opportunities. But you would need to understand how all these settings work together. Absolutely. This isn't something you can just set up and forget about. You have to know what you're doing and be comfortable with how complex it can get. But that's also where its potential lies. You can really fine-tune the EA to fit your trading style and how much risk you're willing to take.
Okay, before we get too deep into the specific settings, let's talk about this auto lot mode feature. What is that all about?
Auto lot mode is supposed to make it easier to scale your trading as your account grows. So let's say you have HedgeRock set up perfectly for a $10,000 account, and it's doing really well. With auto lot mode, you can use those same settings, but on a $100,000 account. And the EA will adjust the lot sizes for you, so you can keep the same risk and reward ratio.
So it's like having someone who automatically adjusts your trading size as your account balance changes. That sounds pretty convenient, especially if you want to grow your capital quickly.
That's the idea. It even has a feature for dynamic compounding, so it uses your current account balance to figure out how much to trade. That way you can grow even faster if the market is moving in your favor.
Okay, but wouldn't that also mean bigger losses if the market turns against you? Compounding can work both ways, right?
You're right. There's always a trade-off when you're trying to grow quickly. Higher potential returns usually come with higher risk. That's why it's so important to really understand the settings and to use them responsibly, especially with an EA as complicated as HedgeRock.
So we've talked about the different trading modes and this auto lot mode, which sounds really interesting, but also a little scary. Now let's get into the individual setting categories. This is where we really get into the details, right?
Exactly. This is where you see how much control you actually have. And there's a lot to talk about. We can start with the FIFO category, which is all about making sure you're following the trading rules.
FIFO, you mean first in, first out. What does that have to do with trading rules?
Right. In a lot of places, traders have to close their trades in the order that they open them. This is especially important if you're considered a qualified trader. HedgeRock has a specific mode for this, so you can make sure you're following the FIFO rule.
So even though it's automated, it still has to follow the rules.
Absolutely. You have to enable the FIFO setting and make sure the speed setting is set to true for it to work correctly.
Got it. So it's built-in compliance.
Sure.
Now, what about this averaging category? We talked about averaging before, but what kind of settings are in this category?
There's a setting called Close on Average. This setting decides if the EA will close all the trades that are linked together by averaging once their average profit reaches your take profit level. So it's like trying to get a group of trades to win together instead of each trade winning on its own.
Interesting. It seems like there's a lot going on with this averaging strategy. What else is in this category?
There's speed, which we already mentioned with FIFO, and co-carry loss, which decides if the EA will try to carry losses forward and make up for them on later trades.
Co-carry loss. That one sounds interesting. Can you give an example of how it works?
Sure. Let's say you have a trade that closes at a loss. If co-carry loss is enabled, HedgeRock will take a part of that loss and add it to the next trade. The idea is to spread out the impact of the loss so you can recover it faster.
So it's kind of like it's trying to smooth things out.
That's one way to think about it, but you have to remember that it can also increase your risk if the market keeps moving against you.
Okay, so it's something you have to be careful with. How about the lots category? This is where you decide how big your trades will be, right?
Right. This is all about position sizing. You have settings like start lots, which is the initial lot size for your trades. Then there's turbo lot, which lets you choose a fixed amount. That your lot sizes will increase by. And max next lot, which sets a limit on how big the next lot size can be.
So you have a lot of control over how much HedgeRock increases its positions.
Yeah.
Which makes sense because position sizing is really important for risk management. But I'm starting to realize that this EA is a lot more complex than I first thought.
You're absolutely right. You shouldn't just jump into this without understanding the basics. But for traders who are willing to put in the time to learn, it could give them a real advantage.
All right, let's take a break here. We've covered a lot already. When we come back, we'll go deeper into the levels category, and we'll see how HedgeRock decides when to enter and exit trades. Stay tuned.
All right, so we're back. And remember how we were about to jump into the levels category? This is where it gets really interesting, because this is where we see how HedgeRock actually makes its trading decisions.
Right. This is how it figures out when to buy or sell, and how much risk to take on each trade.
Yeah.
I guess this is where the grid trading stuff comes in.
Exactly. These settings are all about figuring out those entry and exit points, and then managing the risk.
So can we break it down? What are some of the important settings here?
Okay, so first there's take profit, which, as you can probably guess, sets the profit target for each trade. It's measured in points. Then there's points between levels, and that sets the space between those grid levels you mentioned.
The grid levels. Can you just remind our listeners how that works?
Yeah.
In HedgeRock,
Sure. Imagine a ladder with rungs that are evenly spaced. In grid trading, each rung represents a price level, and that's where HedgeRock will either buy or sell. points between levels decides how far apart those rungs are.
So if the price is going up, HedgeRock might buy at each level as the price goes up, and then sell when the price goes down a bit.
Yeah, that's the main idea. But it can be way more complicated than that, especially with all the other settings. We also have buy-sell stop-loss level. That sets the initial stop-loss level for both buy and sell trades.
Stop losses are super important, especially when you have an automated system. It's like having a safety net. What about reverse on buy-sell level, though?
That one decides when HedgeRock will start opening trades in the other direction, so you know this EA can switch between buying and selling based on how the market is doing. Reverse on buy-sell level sets how much the price has to move against the current trend before the EA thinks about reversing.
So it's like the EA is always watching the market and trying to figure out when things might change.
Right, and it's using those levels to make those decisions in a really organized way. But you know no system is perfect. It can't predict the market with 100% accuracy.
So there's always some risk involved, no matter how fancy the EA is.
Absolutely. And that's a good transition to the order timer category, which is about managing how often the EA trades and making sure it doesn't get overexposed to the market. It's like setting a speed limit for the EA.
So it's trying to find that sweet spot between reacting to good opportunities but not jumping into every single trade.
Exactly.
Yeah.
One of the most important settings here is min margin over equity. This basically tells HedgeRock how much free margin it needs to have before opening a new trade.
Can you give us an example?
Sure. Let's say you set min margin over equity to 0.5. That means the EA will only open a new trade if at least 50% of your account is available as free margin.
So it's like keeping some cash on the sidelines, just in case the market goes against you.
Right. It's a way to stop the EA from using too much leverage, which could blow up your account.
That makes me feel a little better. I was getting a little worried about all this averaging and grid trading stuff. It's good to know there's some safety features. What other settings are there? In the order timer category, I mean.
You also have one buy order time and one sell order time. These settings control how much time has to pass between opening new buy or sell orders. So if one buy order time is set to 1 hour, the EA won't open another buy trade for at least an hour after the last one.
So it's like a cool down period.
Yeah, exactly. Then you have max orders buy and max orders sell. These set the maximum number of buy or sell orders that HedgeRock can have open at any given time.
So even if the market is moving in a way, that's making the EA want to buy or sell a lot. It won't open more trades than you allow.
Right. It's another way to avoid overexposure to the market. And then there's timer. This setting decides how much of the past trading data HedgeRock will look at when it's trying to decide if it should open a new trade.
Past data. How does that affect the EA?
It's all connected to the buy orders per timer and sell orders per timer settings. These settings limit how many losing buy or sell orders can be opened within the set time frame.
Okay, I think I'm following you. But can you give us an example?
Sure. Let's say you have timer set to 24 hours and buy orders per timer set to 3. That means HedgeRock will only allow 3 losing buy orders in any 24-hour period. Once it hits that limit, it won't open any more buy orders until the timer resets.
So it's like the EA is saying, I've lost enough on buy trades today. Let's wait and see what happens tomorrow.
Exactly. It's a way to stop the EA from losing even more money by making the same bad trades over and over again. And there are even more settings to control this, like ADX included, which decides if trades based on the ADX indicator are included in these limits, and reset order count in reverse, which controls whether the counter resets when the EA changes from buying to selling or selling to buying.
Wow. Seems like this guy thought of everything.
Yeah, he's really tried to make a complete system. But whether it actually works well is something you'd have to figure out by backtesting it and really analyzing the data.
Well, we're getting a much better idea of how this EA works. What's next in our settings tour?
Let's go to the IADX category. This is where we get into the specifics of how HedgeRock uses the average directional index to decide when to trade.
Right. We talked about the ADX earlier with Mode 2, which uses the ADX to check how strong a trend is. So what kinds of settings are in this category?
Well, you can set things like the time frame for the ADX indicator, which is the chart period that it's calculated on, and the period over which it's calculated. And then there are thresholds for triggering trades. For example, ADX trigger for main and ADX max for main. Set the upper and lower limits for the ADX reading. That will allow a trade to happen.
So you could tell HedgeRock, only open buy trades when the ADX is above this level, because that means there's a strong uptrend. Or you could say, don't sell unless the ADX drops below this level, because that means the downtrend is weakening.
Exactly. You can really customize how the ADX affects how the EA trades. There's even a setting called Close ADX. that lets you use the ADX to manage open trades.
So you could make a rule that closes a trade if the ADX starts to move in a way that suggests the trend is ending.
Yeah, that's a cool feature. It's like having an early warning system.
But it's important to remember that indicators like the ADX aren't perfect.
Oh, definitely. They can give you false signals sometimes, and they can be a little slow to react to the price.
Right. It's not some magic solution. It's just another tool to help you make better decisions.
Exactly. And that's important with any EA, to know its limits and use it in a smart way.
Okay, let's keep going. What's next?
Well, now we're getting into some stuff that's a little riskier. It's the hedge category. This is where you can turn on and customize HedgeRock's hedging abilities.
Hedging. That's a pretty advanced strategy. What does it mean when we're talking about this EA?
Basically, hedging means opening trades in the opposite direction of your existing positions.
So if HedgeRock has a buy trade open and the market starts going down, it might open a sell trade to try to offset the potential losses.
Right. And you have control over how it does this. For example, hedge class over defines what order size is considered a hedge, and hedge close trigger sets the profit level. That will close a hedge trade.
Okay, but hedging can be tricky, right? It's like you're betting against yourself. What are the downsides?
You're right to be cautious. Hedging can be complicated, and sometimes it doesn't work the way you want it to. It can limit your losses in some cases, but it can also limit your profits.
So it's a double-edged sword.
Exactly. So it's important to understand the risks before you turn these settings on.
Be careful. Okay, how about the recovery category? Does that have something to do with recovering from losses?
Yeah, you got it.
Okay.
This category is all about managing your losses. It uses what are called martingale elements, which basically means increasing your lot sizes after you lose to try to win back those losses faster.
Martingale's strategies, aren't those pretty risky? Like playing with fire?
Yeah, you're not wrong. Martingale strategies are high risk, high reward. You can recover faster if the market turns around, but you can also wipe out your account if you keep losing.
So what settings are in this category?
You have things like loss recovery ratio, which decides how much the lot size will increase after a loss, and max first recovery lot size, which sets a limit on the first recovery lot. There's also second loss recovery ratio, which activates after a second loss, and so on.
So you can control how aggressive HedgeRock is
Right.
when it tries to win back losses.
Right. But it's definitely not for beginners.
Martingale, be very careful. What about triggers? What kind of triggers are we talking about here?
This category is about automating things. Based on certain conditions, it's kind of like setting up rules for your trades. Like, if this happens, then do that. One example is profit trigger, which lets you set a percentage pullback from a trade's highest profit, and that will make the EA close the trade.
So if a trade is up 10% and you have profit trigger set to 0.9, HedgeRock will wait for the price to drop by 10%. Before closing the trade?
Exactly. It's a way to try to get even more profit out of a winning trade. Then there's loss trigger, which is similar but for losing trades. It lets you choose a retracement level. That will make the EA close a losing trade.
So both profit trigger and loss trigger are ways to automate your exit strategy based on rules you set.
Right. It's like having a built-in trailing stop loss and take profit system.
That's pretty neat. It seems like there's a lot of control here over your risk management. So what's next?
Let's move on to the money management category. This is probably the most important section when it comes to protecting your money and making sure you don't take on too much risk.
Money management. That's something I'm always interested in. What kind of settings are there?
Well, there's minimum equity. It's kind of like an emergency brake for your trading. You can set a minimum amount of money for your account, and if your balance goes below that, HedgeRock will stop trading and close all your open positions.
So it's like a safety net to stop you from losing everything.
Exactly. It's a last resort to protect you from a huge loss.
That's a really good feature to have.
Yeah.
Especially with an EA that can make trades. That you might not agree with. What other safety features are there?
There's max equity drawdown. This lets you choose the biggest percentage drawdown you're okay with. If the drawdown goes over that limit, HedgeRock will stop trading again and close all open orders.
So you're basically saying, I'm willing to lose some money, but if it gets too bad, I need to stop and figure things out.
That's the idea. It's about setting limits and knowing when to take a break.
It's too bad more people don't learn about money management before they start trading. It could save them a lot of trouble.
I agree. It's super important for successful trading, whether you're using an EA or doing it yourself.
Well, we've covered a lot today, but there's still more to talk about. When we come back for the last part, we'll look at the spread, slippage and commission, and new settings, which will give us even more information about how HedgeRock works. See you then.
Okay, welcome back for the last part of our HedgeRock deep dive. We've really been digging into this EA. It's definitely complex. Now we want to wrap up by talking about some of the more technical stuff, like spread slippage commissions and even news events.
Yeah, those are some important aspects, and we've saved some of the tougher ones for last. These settings are all about what it's like to trade in a live market.
Right. Let's start with spread settings. Now, I know the spread is the difference between the bid and the ask price for a currency pair. But why does it matter so much for an EA like HedgeRock?
Well, remember how HedgeRock uses grid trading and averaging? That means it's often placing multiple trades. The spread is basically the broker's fee for every trade. So if the spread is large, it can really cut into your profits. So a bigger spread means higher costs, and that can add up fast, especially if the EA is making lots of trades. So what kind of control does HedgeRock give you over this?
It has a setting called max spread, which pretty much does what it says. It sets a maximum spread that's allowed for trading. If the spread for a currency pair is bigger than that, HedgeRock won't open any new trades.
Okay, so that seems pretty simple. What other settings are there for the spread?
There's min spread open, min spread close profit, and min spread close loss. These settings control the minimum spread you need to open a trade or close a trade for a profit or a loss.
So it's like you're setting up these spread filters to make sure HedgeRock is only trading when it's a good idea.
Exactly. You want to make sure you're not giving away your profits to the broker.
I see. Now, I saw something in the manual about internal spread. What's that?
Oh, that's a good one. This setting lets you choose an average spread that HedgeRock will use internally for analysis and backtesting.
Why would you need to do that?
Well, sometimes the spread data you have from the past isn't very accurate or it's not available. By setting internal spread, you're basically creating a standard spread that the EA can use to check how well it's performed over time.
So it's like making sure you're comparing apples to apples when you're looking back at the EA's history.
Right. It can help you trust your backtesting results more.
All right, let's talk about the slippage and commission settings. Slippage can be scary. I've heard some bad stories. How does HedgeRock deal with that?
Slippage is definitely a real risk, especially when the market is moving a lot or when you're trading with big volumes. HedgeRock has settings to set the maximum slippage you'll accept for both opening and closing trades. They're called open slippage and close slippage.
So you can tell it, hey, if the price moves too much against me, don't fill the order.
Exactly. It's a way to protect yourself from those unexpected losses.
Okay, but what if slippage does happen? Does the EA just take the worst price?
Not always. There's a setting called slippage recovery ratio. If you turn this on, it will try to make up for any losses you have because of slippage.
Make up for them. How does it do that?
Remember how we talked about the carry lot? Well, if slippage recovery ratio is enabled, HedgeRock will adjust the carry lot to try to cover the extra costs from the slippage.
So it's like it's saying, I got slipped on that trade, so I'm going to try to make it back on the next one.
That's a good way to put it. And there's a similar setting for commissions, commission recovery ratio. If that's on, it will also consider the commissions you paid when it calculates the carry lot.
Okay, so it's trying to account for all the costs. Pretty cool. Now, there's one more category that I'm a little nervous about, the news settings. It seems risky to let an EA trade during news events, right?
Oh, yeah, definitely. News can make the market go crazy. And automated systems don't always do what you expect.
So why would you ever want an EA to trade during those times?
Well, some traders think that there are good opportunities when the market is moving a lot because of news. And HedgeRock has some ways to manage the risk. It has a news filter. You can use it to tell the EA how to act when there are economic news releases.
Okay, how does that work? What kind of control do you have?
You can choose which news events the EA will pay attention to, based on how much they usually affect the market, low, medium, or high impact. You can also set how long before and after a news release the EA will stop trading.
So you can say, stop trading 15 minutes before a big news release, and then start again an hour later after things have calmed down.
That's right. And you can even filter for news events based on specific words. So if you're trading gold, you could filter for news about interest rates or inflation.
Wow, that's pretty advanced. But I still think I'd be too nervous to let it trade during big news events.
Yeah, that's totally understandable. News trading is very unpredictable, and even the best filters won't catch everything.
Okay, so one last category before we finish up. What about info panel?
Oh, that one's pretty basic. That's where you can change how the information panel looks, the one that HedgeRock shows on your trading charts. You can change things like the size and position of the panel, the background color, and the font size and style.
So it's just about how it looks.
Pretty much. It doesn't affect the EA's trading at all. It just lets you make it look the way you want.
Okay, so I think we've covered just about everything. This has been really interesting. We've learned so much about HedgeRock. It's a super complicated piece of software.
Yeah, it definitely is. HedgeRock really tries to handle the ups and downs of the market, using lots of different strategies and giving traders lots of control. It gives you a lot of power and flexibility, but you have to understand how it works and be ready to learn and adjust things as you go.
It's not something you can just ignore once you set it up. You really have to be involved.
That's the key. It all comes down to the trader in the end.
That's a great point. Knowledge is power. The more you know about your trading tools, the better prepared you'll be for the market. Thanks for joining us for this deep dive into HedgeRock. We'll see you next time for another exciting journey into the world of trading and finance.